Hello and welcome to another weekly market update after the market closed on the 17th of November. Here's where, just in case, I say this speech every week, but just in case this is your first one you're looking at, I've got to tell you what we're doing here. Here's where I look at the long-term trend and the short-term trend of the overall stock market, and that's the S&P 500, the FTSE 100. It's very important to know what kind of market you're in, because you don't want to be buying in a bear market and you don't want to be selling in a bull market. Also, using your pension, everything else is locked in. All that money goes into the stock market. You don't want to be a sitting duck for another 2008. It's also an early warning sign for any recessions, typically giving us a 6 to 8 month warning. And it's also a trading system in itself that I teach at my events that has now made people who are using this system, if the trigger was given a year ago to buy this market, and they'd have been making triple whatever the market made. So it would have been a huge event, and if you, depending on how much you're betting per point, certainly enough to retire on from one single trade. So that is what I teach at my events, amongst other things. A quick note about that, because my event's coming up on January 13th and 14th at Heathrow. You do not want to miss this year's, because I'm doing it a little bit early, because there's some urgent things I want to get across. I'm going to have a special focus on cryptocurrencies, on all kinds of levels, making money with them. Also, I'm going to look at how there's a massive shift underway, like a much bigger cycle in play here, and there are new rules for a new 2 decades ahead of us, and it's very important that you understand what's going on there. So 13th and 14th of January, if you're interested, it's vtapublications.co.uk/99club 2017. So that's vtapublications.co.uk/99club. That's the number 99 club 2017. So let's look at what the market is doing then. And it's pretty much been the same story for the last year now. It's over a year old, where it's not just been a bull market, but it's been a bull market that hasn't even had a sort of healthy correction, really, to come back down to this line here, which is the 40-week moving average. So the average of the last 40 weeks, which kind of smooths things out for us. Each of these vertical things here is week-to-week action. The S&P 500 going back to a few years here. So here's where the signal was given a year ago by my system, and up she goes, and has not given a sell signal yet, although not to have even a healthy correction, as I've been saying for some time, isn't ideal to sustain it. So when a correction does come, you're looking for it to kind of hit, get close to this 40-week moving average and then bounce off, keep going higher, which I suspect will happen. It'll be a big bounce once it just comes down to that level, and it could be happen quite quick. On top of that, the fundamentals, this is getting to be a very expensive market. It's almost at 140% of GDP, which is typically as a valuation you're talking at. We're seeing 143% was the dot-com bubble. I think we're at like 130-ish. So we're getting up there in terms of valuations, but we don't fight that. We don't short that. Certainly, we don't want to get in the way of a moving train, and that's what it has been, a moving train. Let's look at the short-term picture to see if we can get any more clues. It's the same thing, only just zoomed in. It's day-to-day action now, and it's over 6 months. This is a 50-day moving average, and there's that 40-week line we saw on the previous chart. As I was saying last week, I didn't really see much of a warning for anything major ahead. A little bit of distribution, nothing much. And then what we saw this week was this action here. About the same, a little bit of a drop, but fought back. And in the end, closing really much about the same sort of where it started. So, that turned out to be true. Nothing really flagging yet. Is even ever correction underway. Not saying anything to the contrary at the moment to say, things are going to turn around in the next week either. Let's just look at a couple of things here just to give us an idea. Percentage of stocks above their 50-day moving average. It's kind of somewhere in the middle, not oversold, not overbought. Let's look at what we can tell you. Right, the VIX is completely trashed. There's been no interest in buying insurance to the downside. Let's look at the one thing I like to play around with is these Bollinger Bands, which kind of it creates like a channel of extremities as this thing moves forward. And you see this band it creates here. And you can see, as it gets too close to the bottom, it bounces up, too close to the top, bounces down. It's kind of in this zone here, and you can see it's been skirting the top for some time now. And then eventually, of course, it does come down. But you can't really time that, unless it gets really extremely far out of it, like here, then, it's just a kind of time for it bounces back in. But you can see we're in the middle of the zone. There's no extremities really showing up yet. And as I've been saying now for the last couple of weeks, we're into what's typically a good, not a guarantee, but we're typically into a good time for stock markets when it's, November, December. November, it's got the holidays in America. Thanksgiving's next week, by the way. So Thursday isn't a trading day. And then, of course, it's December and it's Christmas. But these are typically 2 good months. And January, we'll just have to see. So long-term trend is up, short-term trend is up. Got no reason to think different. I'll speak to you next time.